The biggest news is that Strive added $50 million of STRC onto their balance sheet. In Q4 of last year, Strive kind of led the way by adding a US dollar reserve to fund their dividends, but now they're rotating some of that cash that they've raised recently into Stretch. And I kind of view that as a bit of a, de-risking so that they can cover the dividends for their product. And just looking back to the last couple of days, they traded over $315 million on STRC on Monday. On Tuesday, March 10th, they set a record over 409 million daily trading volume on Stretch. To me, that's a signal that this professional preferred stock is deepening in the institutional liquidity, which is just wild to see in a bear market. STRC fueled 30% of Strategy's most recent Bitcoin acquisition, which was 18,000 Bitcoin. They deployed almost $1.3 billion to purchase Bitcoin at 70,000 a coin. They raised $377 million just off Stretch alone last week. And with the volume numbers we're seeing this week, what do you think the buy is going to be like for Strategy in the upcoming week?
Looking at the numbers, looks like they can potentially double it.
Hey everybody, Tyler here with the BitcoinTreasuries.net podcast. I'm here with Yves-Andre Graf from the One Share Pod. Welcome to the show, Yves.
Thanks, Tyler. Thanks for having me on.
So we're going to break down some news today, Yves. We've got a lot of news in Bitcoin Treasury space. Of course, let's lead with the big news from Strive today. Strive announced a whole host of updates. They increased their dividend from 12.5% to 12.75%, and that's paid monthly on SATA. SATA is the product, for those who might not be familiar, that is similar to STRC from Strategy. They also amended the target price range on this product from $99 to $101. Let's dig into it. The biggest news is that Strive added $50 million of STRC onto their balance sheet. So as our viewers may recall, in Q4 of last year, Strive kind of led the way by adding a US dollar reserve to fund their dividends for 24 months, and Strategy quickly followed suit. But now they're rotating some of that cash that they've raised recently into Stretch. And I kind of view that as a bit of a, de-risking so that they can cover the dividends for their product. And what do you think about the news, Yves?
A big news from Strive. I like the news. I think obviously the dividend increase makes sense, right? Because we've seen the price below the target range. I think here it's going to be interesting actually if they come up with a similar guidance as a Strategy. I haven't heard anything like around a proper guidance in terms of just how STRC or Strategy has this VWAP in order to increase the dividends. I don't think that Strive has anything like this, so it's probably still on the price range of the actual product, so SATA. And regarding their target range, I also thought that was interesting. Here, I think it's so here's a little bit of speculation from my side, but I believe the reason they did it is because when investors see that there's an increased range, so let's say how it was 95 to 105, they might be prone to understand that there's a bit more volatility into the product. So the fact that they reduced it to 99 to 101 probably gives confidence to whoever's buying the product to be able to assume that there's less volatility, right? So that's just an assumption from my side as of now. Would be curious to know the thought behind it from Jeff, Cole, or anybody at the Strive team. And just the as you mentioned, the big news with the purchase of STRC. I think this serves mainly as the cash reserve, right, for what they have provisioned in terms of future dividends for SATA. It's going to be interesting to see how the market reacts to this, right? Looking at the price earlier of SATA and Strive, looks like the market is pretty positive to the news. And that's great to see, because you would expect that there could be also conflicting ideas here where you think, oh, why are they buying STRC with a dividend yield of, or a dividend rate of 11.5, and then they're emitting SATA with a higher dividend rate, right? So so far looks good as of today. Obviously, we have only seen half a day of trading, but the market seems to take it as good news, which is interesting.
Yeah, it is really interesting, and it looks like their average 30-day volume on SATA for this digital credit product was 122,000 shares, and they're already trading 3 hours into the trading day, 268,000 shares. So definitely some bullish news. It's up 1.26%. Of course, it hasn't really held that peg in the same way that Stretch has, but I think they're well on their way to getting there, Eve. A tweet that I put out earlier today, just talking about the flywheel. It says that Strive is using its balance sheet to swap into the lower credit risk of strategy while getting paid a yield to do so. So, like you said, yeah, it's kind of like a bit of a reverse arbitrage where it's paying a lower dividend than they're paying out on SATA. You know, normally companies would pay a premium to transfer risk through like, you know, an insurance policy or credit default swap. But this is kind of a way that um, Strive can offload its risk to the lower risk balance sheet that's secured by so many Bitcoin that strategy has to offer. So they're putting the USD reserve to work. It helps them get more dividend coverage. They increase their USD cash position to cover 18 months of dividends. And yeah, I just think it's really cool how they're doing this. You know, I'm sure there's going to be bears out there talking about how, you know, oh, this is a Ponzi, you know, you have these companies buying each other's products and shares. But again, directionally, all these companies are long Bitcoin, and the long-term CAGR of Bitcoin relative to the US dollar, they expect to be 30, 40, 50%. So all of this works in an environment where Bitcoin is trending upward over you know, a several year time frame. I was just looking through the SEC filing here. I wanted to make sure we didn't miss anything, but um, yeah, they're basically holding $143 million of cash and equivalents, and 50 million of that was deployed to purchase Stretch, and they also purchased some more Bitcoin today. So they purchased another 179 Bitcoin, and that puts them to 13,311 Bitcoin. Just another thing to remind our viewers of is the ROC treatment of their preferred equity dividends. So from a U.S. federal income tax perspective, because this is a return of capital to shareholders, there's no tax liability. So I just see, I think we're going to see more and more money rotating into Stretch, to SATA, and into these products as time goes by, as people realize, you know, not only is Stretch and SATA an 11.5%, a 12.5%, 12.75% savings account, but it's tax free. And I think that's a key point, Eve.
Yeah, absolutely. And maybe one thing I want to come back to, and you mentioned it very well, is how Strive is actually taking risk off by taking on the STRC on their balance sheet from strategy. And here, just before the bears come and say, oh, why wouldn't strategy be able to do the same with SATA now and buy SATA and put it on their balance sheet? It's exactly because they don't want to have a riskier asset. So I don't see any time in the near future strategy putting SATA on their balance sheet, or any other instrument for that matter. So it's going to be right now strategy as the provider of these digital credits, and potentially other Bitcoin treasuries having STRC on the balance sheet.
Yeah, totally. I think you nailed it on the head. You know, it's like, why would a bigger company, you know, take on the preferred equity shares of a company that maybe has more risk as viewed by the market, certainly by its Bitcoin stack size. Just looking at strategies STRC today, the volume there is also sky high. They've almost traded $200 million in volume just in half of a trading day so far. It's kind of wild to see what strategy have done with that volume over the last few days, Eve. So just looking back to the last couple days, they traded over $315 million on STRC on Monday. On Tuesday, March 10th, they set a record, trading over 409 million daily trading volume on Stretch. So that just, to me, that's a signal that this perpetual preferred stock is kind of deepening in the institutional liquidity for the Bitcoin backed yield instruments generally, which is just wild to see in a bear market. Um, with Bitcoin's price down as it is, Saylor keeps stacking, and we'll get into how much he's stacked this week, which is, just mind blowing. We could talk about that right now. This week, and this is from BitcoinTreasuries.net. Oliver Koblazek, who wrote this article, he's doing great work covering this whole space and this trade. But STRC fueled 30% of Strategy's most recent Bitcoin acquisition, which was 18,000 Bitcoin. They deployed almost $1.3 billion to purchase Bitcoin at 70,000 a coin. So this brought Strategy's total Bitcoin holdings to 738,731 Bitcoin. And so they raised $377 million just off Stretch alone last week. And with the volume numbers we're seeing this week, what do you think the buy is going to be like for Strategy in the upcoming week, Eve?
Looking at the numbers, looks like they can potentially double it. I mean, considering that they had the record date or the record day yesterday, and now we know who the big buyer was. As we just mentioned, Strive was the big buyer of STRC because there was if you look at the charts, there was a peak in terms of trading volume at some point, and now we know why. Coming back to the big buy, I think here that what's amazing to see is Strategy being able to buy such a huge amount of Bitcoin, and again with 30% of it with STRC on such uncertain times, right? We have geopolitical issues, and I mentioned on the pod on one chair on Monday, it's quite amazing to see such a product, such a nascent product, STRC, trade already at par during such uncertain times. I mean, you wouldn't expect it to trade like that while there is such an event happening, and he traded throughout the full week at 100 while the war with Iran started, and for me that's just mind-boggling right now.
Yeah, it is totally crazy to see it during a bear market, during a time of geopolitical tensions. You've got Stretch just trading at par, and I mean, even among a major theme on Twitter this week is how there's been a lot of redemptions in private credit markets in the United States. So as private credit is on shaky ground, you've got Bitcoin fueled credit absorbing more and more cash to purchase more and more Bitcoin. You're right. It's an interesting point to see that Strive was the big buyer of Stretch last week. It's so cool that most of that money is just going to purchase Bitcoin while offloading some risk for Strive. So you love to see it. From this article, Chaitanya Jain addressed a recent surge in Stretch demand, and this was a big topic at Strategy World, where you and I were both sitting through a lot of speeches and some different conversations around the seasoning of Stretch and SATA. He says, STRC went through a seasoning phase during a weaker Bitcoin market, which created price volatility and occasional flash crashes. But Strategy established a USD reserve covering 2.5 years of dividends, and the dividend rate increased month on month to 11.5%. He also added that the investor base has shifted meaningfully. Shares rotated from IPO investors focused on price arbitrage to now we've got seasoned investors seeking consistent monthly yield. So the flywheel's working, Eve. It's great to see more shareholder alignment where people are coming in and just buying and holding Stretch for that monthly dividend. Which that's just absolutely great to see. I was looking at a tweet from Grain of Salt, and he referenced one of your charts here, which was great. He said, "Hey, OG Bitcoiners, you could split your Bitcoin between Stretch and SATA 50-50 and get paid bi-weekly." So, of course, SATA is staggering their payment halfway through the month, where Strategy pays their dividend right at the end of the month. So Grain goes on to say OTC desks are open 24 hours a day to buy your Bitcoin. Thanks to the Strive and to the strategy team. But yeah, super cool to see. Here's your little comparison. That shows the stated amount. Of course, we've updated our viewers on the updated Strive data from today. But how do you think about that? Is is this digital credit revolution an important tool for Bitcoin OGs or Bitcoin whales who are kind of like wanting to rotate maybe some or all of their stack into something that can give them Bitcoin exposure, but more of a monthly, biweekly income stream?
Yeah, absolutely. So maybe just briefly, I am working on the table to update it. So that's just a reference. So expect to see the updated chart or the updated table this evening. Regarding the accumulation, yeah, I think that completely makes sense. You know, you have a lot of OGs already that have now accumulated quite some wealth, right, through hodling of Bitcoin over years or maybe a decade already or more. And now their goal is probably just wealth preservation. It's not wealth accumulation anymore, and those products definitely serve that, because now suddenly you have this stable product with very low volatility, and that's able to yield you 11 or more percent. And so it completely makes sense. And now we've even seen new products that are coming into the market that use STRC to continue yielding, right? So tokenized assets on top of STRC. So also you don't need to necessarily hold STRC, but you can also have tokenized assets on top if you want to still have this kind of sovereign effect. And I just find it quite fascinating.
Yeah, it all really is incredibly fascinating, and it is interesting to see. It's like when you've held an asset for so many years, we see this every cycle. It's just human psychology and economics that people are rotating out of their Bitcoin positions. Certainly not all hodlers are out there selling their Bitcoin, and we know Michael Saylor's never going to sell his Bitcoin. He's made that very clear. But people do have to live their lives. They've got different circumstances, and seeing them rotate somewhat into digital credit is also amazing to see. And I think we're just on the tip of the iceberg with this digital credit revolution. There's so much money sitting on the sidelines, and institutions want that comfort. They want that seasoning. They want years and years of seeing that these dividends have been paid. Just pivoting, taking a look at the current dashboard that Strive has on their website. So they're trading a little bit below their MNAV currently. Their leverage ratio is really low. They have I think just $10 million in debt on the balance sheet. So it's great to see such a clean balance sheet. They've got US dollar reserve there to cover dividends. Now they've got stretch. Their amplification ratio is 46.6%. So I think that's probably why we haven't seen, between the fact that SATA has been trading under par and they want to get that up to 100 as quickly as possible. But we haven't seen them, amplify through that product as much, because I think they're probably happy with that 46% ratio, at least for right now. It'll be interesting to see if we see more guidance on that in the future. Just looking at strategy for some apples to apples comparison, they've got a 33% amplification ratio from their debt and their preferred equity products. So, and just really cool to see. And I just want to highlight again these purchases. It's been incredible. I've been covering each week this year Michael Saylor's buy through MicroStrategy, and to see him drop, 18,000 Bitcoin, which is almost 6x the total mine supply for the week, has just been dropping. He just really is buying every week, and he's vacuuming up all the new supply that is mined by Bitcoiners and then some, by Bitcoin miners and then some. And I don't. How does this stop, Yves? Like, if he's able to raise this much capital through a bear market, how do you see him raising capital once Bitcoin's price turns around?
Yeah, that's a great question. We've seen actually right now that he's able to accumulate thanks to at least on the MSTR ATM, thanks to the volatility of Bitcoin, because we haven't seen any intense increase of the price of Bitcoin, and yet he was able to raise all of this cash last week. It's going to be very interesting to see the dynamics once there's a price appreciation on Bitcoin. on one hand, obviously, we have STRC doing its thing, and that's going to continue as Bitcoin price increases. But I think it's going to be probably a bit more interesting what happens with the common share as well, because with the price appreciation, then obviously the balance sheet just grows stronger and amplification lowers. So probably they don't need to raise so much MSTR share when that actually happens. And on the flip side, they won't be able to buy as much Bitcoin because the price appreciates. So there's a few dynamics that you need to consider when that happens. And to be honest, I don't have a clear answer yet. But again, we're really curious to see. In any case, they will be able to raise way more cash, but maybe the amount of Bitcoin that is bought is probably not going to be that much bigger.
Right. We're going to look back on this, a decade from now and just be like, oh man, he was accumulating so much in Bitcoin terms as we continue to denominate these MSTR purchases more in the absolute Bitcoin that was purchased rather than the US dollars deployed. So, $1.2 billion is a jaw-dropping number, but yeah, it may look a lot different in 10 years when maybe they're deploying multi-billions of dollars in a week and accumulating far less Bitcoin as the price continues to run. So talking about kind of those supply dynamics in the future of Bitcoin's price. Now, this is a little chart from Glassnode that the big news this week is that the 20 millionth Bitcoin was finally mined. So there's less than 5% of the total supply of Bitcoin yet to be mined over the next, say, 114 years. So 1 million more Bitcoin over the next 114 years. That's practically the size of Strategy's balance sheet. So, I mean, it just shows. So I think sometimes we take the supply schedule for granted in Bitcoin and just kind of resetting and saying, hey, there's only 21 million Bitcoin. That's kind of the value prop of Bitcoin. Obviously, we think there's several million Bitcoin that have also been lost. So I think the actual functional supply of Bitcoin is probably somewhere between 15 to 18 million Bitcoin, and the halvings, the next halvings coming up in 2028. So, miners are going to be supplying even less on the sell side of the equation. So, I guess that's all to say. We've got one place to go from here, Yves, and that's higher in Bitcoin's price. Am I right?
Yeah, absolutely. I mean, there's no question about it. Looking at the price right now, I'm actually surprised it's still at 70K. I would have expected way higher than this right now.
So I want to take a look at core CPI. So we had news today that core CPI came in about as expected. Geiger Capital was out there tweeting that it came in to its lowest level since 2021. So we've seen just a secular move down since basically 2022, 2023. This is as measured by the US government, which, I mean, the way they measure CPI is something that I think I take a little bit of umbrage with. I don't think they properly account for asset inflation or housing and energy costs in the way that they should. But, just seeing this number come down, the Trump administration is putting forward Kevin Warsh as the new Fed chair in the coming months. His Senate confirmation will probably happen in May or June if everything goes as planned. But just looking at this chart and seeing where that's going, I kind of view this as the Fed being like, okay, we can ease a little bit more, and we may see those short-term federal funds rates be targeted at a lower percentage, which, of course, in Bitcoin we know means downstream effects are that liquidity is coming to the marketplace. So how do you overall view the liquidity situation right now globally, Yves? And are you concerned about the tensions in the Middle East with the Iran war between that's kind of being waged by the U.S. and Israel. Do you think that could have a dampening effect on liquidity? And where does Bitcoin kind of fall in that whole conversation?
I mean, on that level, I'm not such a big macro guy, right? But based on what I've seen and what I look at, yeah, I think the crisis, the geopolitical crisis, is one of the big things that I'm looking at, because I think that's what's going to drive what happens next. Here, I think it's going to obviously ultimately go to money printing, right? They're going to have to ease. The US has to manufacture more weapons, more ammunition in order to defend the Middle East, and I don't think there's a way out here. It's just a matter of time at the end of the day. And we've seen that. We've been waiting for it for a while. The Fed has been sitting on it. They haven't moved. Last year we expected more Fed rate, more Fed rate cuts. Nothing happened, and this year we're still expecting again not much moved. Probably with the chair, Fed chair changing, that will change. And now with the situation, there's no other way around. Again, it's more of a patience game, and when that happens, obviously, in my opinion, Bitcoin will be one of the leading indicators where you can see the price that will appreciate as things change in the macro in just on the macro level. So I think this is, unfortunately, the situation isn't great, but it's bullish for Bitcoin, and yeah, that's what it is.
Yeah, I think you nailed the key points. We can kind of hold those two tensions together, where it's like we're bullish on Bitcoin, but it's kind of because we know these geopolitical situations, this money printing, this easing of monetary policy is just inevitable and can't really be the genie's out of the bottle. You can't really put this back. So I'm just taking a look at the crude oil futures prices, and we had a huge spike, obviously with the bombing campaign in Iran, because a lot of the world's oil comes right through the Strait of Hormuz there, where a lot of the fighting's happening. So yeah, this is something that might keep the Fed from moving towards rate cuts, possibly. Again, I'm not the big macro guy with all the answers either. But if there is some inflation on the oil side of things due to supply shocks, I think it may be a little bit. The Fed may take a more cautious approach towards easing. However, I think you nailed a key point on the head, and that was that the U.S. is going to have to manufacture more munitions and more arms, and that is obviously stimulative downstream in the economy. So all things that are bullish for risk assets, for liquidity, and I think Bitcoin will continue to be kind of a leading indicator on that. It's interesting as I look at a U.S.-Iran nuclear deal on Kalshi. That's a prediction market. It's funny. Bitcoin kind of does move in tandem with prediction markets. We saw in 2024 that it was moving with prediction markets as the Trump administration looked poised to win on election night because of the new regulatory regime that was more friendly to Bitcoin and crypto at large. I think that Bitcoin's price reflected that, and it's funny to see us back testing those levels that we blew through from November of 2024. But I think also looking at the Iran situation. Bitcoin obviously had some structural flaws and some liquidations that happened, back on October 10th of last year, 2025. But I think a lot of the consolidation in the 60,000, 70,000 phase was because it was an indicator that, hey, these tensions in the Middle East are something to take seriously. So I look at Kalshi right now. They've got the odds of a peace deal, a nuclear deal between the U.S. and Iran, at around 40% before 2027, and I think Bitcoin's price is kind of indicating the same thing. If we see these markets spike, we're going to see Bitcoin's price spike as well. If things turn bearish on a nuclear deal framework, I think Bitcoin's price will also take a hit, because as much as we hope it is this uncorrelated asset, and it has been to some extent, as people are treating it as digital gold or a store of value, it is tethered to risk assets generally. So how do you view Bitcoin in this current regime we're in as a risk asset, a risk off asset? Obviously, I guess you personally view it as a risk off asset, but why hasn't the market caught up to that yet?
I mean, yeah, there's probably various factors for that, but maybe one of the things that comes to mind, and here maybe it's related specifically to the Middle East, but looking at what happened in Dubai, I don't know if you saw those videos where there's nobody in the malls anymore. Like the airport was completely packed with people leaving, and so on. And again, like exactly, like people are now leaving this place, the UAE and all the neighboring countries probably as well. What happens there, right? So because we've also mentioned in the past that some of the bigger buyers of Bitcoin are the sovereign wealth funds. So again, what's the first thing that they, if they need cash, would they liquidate? Probably Bitcoin is one of them, right? And same for probably the whoever's leaving Dubai. I don't know if there's also a big crypto hub over there. um, what are the assets that they're going to take? They're not going to take their home. They're not going to be taking whatever art or things like this right away, or maybe they come back later to grab it. I don't know, but they're going to be carrying Bitcoin or whatever they have. So all of these things, even for Western, I would consider the UAE, Dubai, Abu Dhabi, kind of in the Western world, and even in these situations, what do you take? Bitcoin is just the easiest asset that you will carry. And obviously, in the Western world, we believe that we don't need it. But at the end of the day, it's not so bad to have a small stash of Bitcoin. And when these tail risks happen, um, then you have your asset. And it's a risk off asset. It's just used in a different way. You're just using it to carry it to another location with you, and this is just giving you the proper means to start over a new life somewhere else. So that's how I view it, at least from my perspective.
Yeah, it's incredible to see how, you know, uh, the world outside of the traditional West in Europe and the United States, Canada, does view it as a risk off asset because, uh, I saw some people talking on chattering on Twitter about, well, why don't people in these war torn countries or where there's political upheaval and war rotate into USDC or Tether, a stable coin. And I think they do. I think there's a large adoption there. But, Bitcoin still is just like the most liquid globally traded asset where you can purchase it. And you may not, there may be barriers in place, regulatory constraints that Bitcoin doesn't face on the US dollar tokens. So it is really cool to see these anecdotal reports of people in Iran being able to, get out and take their wealth with them via Bitcoin. People in Abu Dhabi, in Dubai, at least able to escape with a large portion of their wealth with Bitcoin, because if uh, because it's digital. You can't drag ounces and ounces of gold, large bricks of gold with you on a plane, but you certainly could take a flash drive, a hardware wallet with you very easily, and get to somewhere that's safer. So really cool to see that. I do want to talk a little bit about some increased regulatory scrutiny, I would say, here in the United States. I'm not sure if you heard about this, Yves, but the IRS, which is the tax bureau for the United States, issued this guidance and digital asset platforms, wallets, services, and products used form for taxpayers in the United States. So with this form, uh, they're basically wanting all U.S. taxpayers to, in essence, dox themselves and list all of the places that they've held their Bitcoin, whether it's an exchange, a custodial solution, or self-custody wallets. And they listed a bunch of itemized exchanges, including Mount Gox. So they're wanting this to go back historically. Certainly, they put Ledger, Trezor on there, and they want you to check yes or no for every single one. TFTC Marty over there says this isn't a tax form; it's a mapping exercise. They don't want to know what you traded last year. They want a complete picture of everywhere your crypto has ever touched going back years. And the catch is there's no right way to fill it out because, if you forget something, they're going to get you for perjury or tax evasion. Or if there's something that's sketchy, or it's commingled with funds that weren't KYC'd, maybe before there was a regulatory regime, they'll get you on some sort of anti-money laundering law or something like that. So obviously, not official advice, but consult a tax attorney if this is something, especially if you're being scrutinized on this type of thing. We've had a lot of great regulatory clarity and a better posture towards Bitcoin and crypto, but seeing something like this guidance from the IRS asking people to, like I said, kind of dox themselves and provide a trail of everywhere their Bitcoin touched leaves me kind of sighing and saying, we're not there yet, Eve, on having the best regulatory regime. What do you think about the latest news here?
First thought that comes to mind, thank God I'm not American. No, so obviously it's an issue I think worldwide. Obviously, I think in the US the IRS is a little bit more aggressive in general, but we've seen this type of tax regulations everywhere. I mean, we have some here in Switzerland as well, where we need to obviously declare our Bitcoin where it is and so on. So I think that's just something that we have to deal. Am I happy about it? Absolutely not. But yeah, let's hope that this gets better over time. And yeah, um, yeah, this one's is a tricky one.
Yeah, it is tricky, and we've seen a lot of capital rotate into IBIT and the other Bitcoin ETFs. We've seen a lot of capital rotate into Bitcoin treasury companies, MSTR specifically. So a lot, the governments do kind of know where a lot of that Bitcoin is sitting, and there's fewer and fewer from a um, total nominal perspective of Bitcoin sitting out there that I'm sure the government would love to track and surveil. It's like they always say they have the best intentions, that they want to stop crime, stop money laundering, and I think most people are in favor of that type of thing. But the means of doing it by taking away the privacy layer, I think, is something that's it's just always going to be a conversation and going to ebb and flow when it comes to Bitcoin, when it comes to crypto, by and large. Last thing I wanted to touch on today, I saw this tweet and I just had to chuckle, Eve. So this is from C2 Blockchain Inc. and CBLO Treasury Update. This had 30,000 impressions on X. C2 Blockchain Inc. has increased its corporate treasury to 841 million dog, acquiring 21 million dogs since the last update. The company continues executing its strategy of building a significant dog treasury on the BTC network. Interesting, on the BTC network. Track the holdings at c2dog.com. Updated balances will be reflected in the company's next public filings. So I checked out this website. Do you know what the heck they're talking about here? We're steeped in the Bitcoin and Bitcoin treasury space. I researched this for a couple minutes, and it's pitching itself as being on the Bitcoin network through the Runes or Ordinal protocol. We still haven't learned, have we, Eve, that I guess who are the people out there that are trading dog, which is a derivative of runes, which is a derivative of using op return on Bitcoin. Why are people still messing around with altcoins, and why are they messing around with meme coins?
Um, I know of a few reasons why. I mean, assuming that you're talking about the old BCs, they had this ICO craze, and then they had NFTs and so on, and they've probably made a lot of money in the past, so there was a recipe for success. But I'm not sure this will last for much longer, and they're still trying to find a new thing that will make them money somehow. Probably that's the way to do it. That's why they're also trying. I don't like this term, but that's so digital asset treasuries that are not Bitcoin specific, and they're hoping that they will be able to catch the next wave with this and capitalize on it basically.
Yeah,
And
I wonder what is the consumer mentality to think that's feeding into this. To me, I've always viewed these tokens as kind of like digital trading cards like Pokemon, or so gambling in respect. At least here in the U.S., we've seen some gambling regulation, and those companies are taking off because people are looking, for a way to, I don't know, spend their time, spend their money in hopes of a brighter future. Is that how you kind of view this from the retail perspective?
I mean, I think the retail perspective is, or the sentiment from the retail perspective is getting low, and that's why there's not much traction on these projects either, right? So probably there's still a minority of people that gamble or try their luck with these type of speculation vehicles. But in general, I think when you look at the general sentiment of the crypto space, so I'm here talking Bitcoin plus all the cryptocurrencies, um, it's not great. It's just not great. You see all the tokens that are just dwindling in value. And if you actually think of why some of the tokens still exist, some of them were early on, and they actually have a treasury in Bitcoin. And what are they doing? They're selling their Bitcoin to buy back their tokens. And that's why the value is more or less not stable, still dwindling, but at least it's not completely dying. And then that's also one of the reasons why you see a lot of Bitcoin being sold. Actually, there's quite a few of those treasuries with a lot of Bitcoin. So so that's maybe just an interesting take that I've seen from the crypto space. And yeah, I think you're seeing it, at least in my opinion. The whole cryptocurrency space is, in my opinion, dying.
I think so too. That's an interesting take, Eve. One I haven't thought a lot about is that some of these OGs or whales that have been selling Bitcoin are probably related to some of these tokens or ICO companies, and they're just propping up the rest of their market. And I think you're right, because we didn't see as much of a retail influx in this last bull market in Bitcoin and all the downstream crypto projects. I think you're right. I think this is really being propped up by by people still looking to legitimize or sell their product, and eventually that wheel stops spinning. Right, it comes to an end. Unfortunately, that can have some negative consequences on the short term price of Bitcoin, because as more Bitcoin is sold off in a last ditch effort to kind of prop up these projects, I think that's something that could hit Bitcoin in the short term. But as we know, Michael Saylor, Bitcoin treasuries, and hodlers are going to be there smashing by to pick up the cheap Bitcoin when they can. This has been great conversation. Thanks for covering the recent news with me, Eve. Tell all our viewers where they can find you and the One Share Pod.
Yeah, so we're quite active on X. You can find it. You can find us on at One Share Pod, or myself at Graf Eve, and you can also find us on YouTube with the same handles. So yeah, thanks for having me on, Tyler. That was great.
Awesome, and you know what to say. I'm not even gonna prompt you.
Stay orange.
Thanks, Eve.